The European Central Bank is widely expected to announce major stimulus measures on Thursday, aiming to revive sluggish growth and deflation in the Eurozone. But will this prescription be strong enough to help Europe? And what does this mean for the euro? I'm joined now by Dr. Reto Foellmi, an economics professor at the University of St. Gallen, and he joins us from Switzerland. And Professor, first off, will this quantitative easing program fix Europe's issues?
I think the program will be instrumental to start to fix the European issues, but of course it will not be enough to fix European issues. Monetary policy can help to gain the politics some time, but of course the structural problems, real politics must resolve themselves.
And after these stimulus measures are announced, how far do you see the euro falling against the dollar and other currencies?
The announcement of the stimulus already started some weeks ago, of course, created a lot of uncertainty, and we see mounting uncertainty now in the market. Also, the recent decision of the Swiss National Bank can be seen in that regard. And so I think the euro has already fallen quite a lot, which of course stimulates the European economy. So that's a good thing for the European economy. I think we have seen most of the fall, but of course there are additional turbulences and confusions ahead in the coming days and weeks, also in the political side. So of course we still will see a lot of volatility in the coming days and weeks.
And what does that mean for, say, US investors? How should they play this?
If you can see through this present volatility and uncertainty, say simply from a investor's perspective, European investments are not so bad as they seem now. I think they are quite fair priced. From a Swiss perspective in particular, the Swiss franc is now really excessively high valued against the euro. If you look at in a historical time frame, the Swiss franc has now achieved a value against the euro which is unprecedented since the Second World War, more than 5 to 10% above the highest levels we have seen. These levels actually do not really fit the real economy, and I cannot imagine that they stand for long, and as soon as these uncertainties have resolved, they will come back to, say, more normal levels. So in some sense it's a good opportunity to invest, simply from an investor's perspective.
Let's talk more about Switzerland. They made a dramatic move last week to abandon its cap with the euro. Do you think Switzerland could come back and intervene again if the euro drops even further?
True. I think the move was really bold, as you say it, and one of the main reasons that this minimum bound against the euro was introduced was, in 2011, the excessive volatility of the Swiss franc against the euro. So if you see this excessive volatility now in the weeks coming again, then the National Bank will intervene again, I'm sure. And it will also intervene if the levels we see now of euro versus Swiss franc of 1-to-1 persist over a longer time, because again these levels are so high that the Swiss economy, the exporting industries, will have big difficulties in bearing it. Yeah.
All right, Dr. Reto Foellmi, an economics professor at the University of St. Gallen, thanks for being with us. I'm Scott Gamm, and you're watching The Street.